interesting pattern showing up here. Bitcoin's consolidating right around $82,500, and honestly, the setup's pretty fascinating. We're seeing this classic triangle formation after that multi-month high. But here's what's really catching my eye. The market just digested some seriously hot US CPI data, and now everyone's worried about Fed rate hikes again. That's typically not great for risk assets like Bitcoin, but look at how well it's holding up. We've got this key resistance cluster between $81,000 and $83,000 that's been rejecting price multiple times now. It's right at that declining 100-day moving average, so it's a proper offer zone. But here's the thing. If we can smash through that level, we're looking at targets around 84,000, then 85,000, potentially even 92,000, where those short-term holders start getting heated. The support's holding pretty solid at $80,000 though. Below that, we've got bids at 78,000 and the rising 50-day moving average around 73,000. What's really interesting is this rare MVRV golden cross that just flashed. Plus, we're still seeing steady ETF inflows providing that underlying bid. Strategy just picked up another 43 million in Bitcoin, so institutional appetite is definitely there. The weekly chart shows a clean break of that multi-month downtrend with a bullish MACD crossover backing it up. But I'll be honest, capital inflows are still pretty weak compared to previous expansion phases, and that negative Coinbase premium suggests institutional demand isn't as strong as it could be. The liquidation map's pretty telling too. We've got long stops clustered below 80,000, especially around 78,000 and 73,000. A sweep below those levels could trigger some serious long liquidation down to 71,000. On the flip side, there's a nice cluster of short stops above 83,000, with clear targets at 84 and 85,000. If price breaks through that resistance, we could see a proper short squeeze. The funding rates just turned positive, which usually signals more upside momentum coming. But we're also dealing with fresh inflation worries and Fed rate hike fears, so it's creating this interesting tug of war between bullish technicals and bearish macro headwinds. The key level to watch is that 82 to 83,000 zone. A decisive break above that with volume would confirm the bullish momentum and likely trigger those short liquidations I mentioned. Failure to break could see us retesting lower supports and getting chopped up in this range for longer. That's what the data is telling us.